Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion, delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit in current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls. I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. What are we celebrating today? And I just messed up my whole screen so I can't see a darn thing. I know it's one that I have near and dear to my heart, especially for those folks that have the time, patience, knowledge, and ability. It's National Coaches Day today. Yeah, we love those men and women who volunteer as coaches, especially the ones for the little kids. It's a challenge. I was out over the weekend with my 4-year-old grandson watching him play soccer. And if you've ever watched 4-year-olds play soccer, pretty funny, pretty humorous. You know, it's a beehive. The beehive moves, the ball moves, the beehive moves. They don't kick it to one another. They're all trying to kick the ball at the same time. Sometimes they kick it in the right direction. Sometimes they don't. But it's all in good fun. So National Coaches Day. It's a shame that, every time my sons all played organized sports. I'm a big believer in organized sports. But sometimes the parents get a little out of line, and for some reason every parent thinks that, and I guess I don't have to date myself. So I made the comment that maybe my grandson will be the next Pele, and everybody said, "Who?" I guess the newest is Messi and Ronaldo. Are those the two new soccer greats of this day and age? I had to make sure I got the right one because my grandson wanted the Ronaldo jersey. So, of course, what grandkids want, grandkids get. So he got his Ronaldo jersey over the weekend. He's all excited about that one. I bet I could have got a cheaper price on a Pele jersey, but that's a whole different story. Then I'd have to explain who it was. Talking about explaining who it is or what it is, today's National Orange Wine Day. I don't even know what orange wine is. And then I looked it up and I said, what is it? And I still don't know what it is.
It is what it is.
Where they come up with some of these things. So I'm just going to go to National Noodle Day. National Noodle Day. I like noodles. Some of the spaghetti. Well, this one looks like it's a Chinese fare, which I like. I have been going a lot to spaghetti squash. Doesn't have a lot of flavor, so it's covered with whatever the flavor is that you put on it. But on this weight loss program that I've been on, 89 pounds as of right now. The spaghetti squash is a good noodle substitute. Although it's not like, I love Italian food. So, but the doesn't do much good for my diet. Hey, if you want to follow the journey, rsrlinks.com/shot, rsrlinks.com/shot. And if you want to follow the area where I can show you some sources for much more affordable options. And yes, I have gotten into doing a lot of study, a lot of research on some of these things. There's a lot of affordable options out there. There's a lot of holistic medicine things. I've shared some white papers from my research. And I'm not a doctor. And I don't play one on TV. I don't give medical advice. But I can do some research and I can write some papers. And I always cite my sources. So if you want that information, I am more than happy to share that with you. All you need to do is ask. But today is National Noodle Day. What's your favorite noodle? Or what is your favorite preparation for noodles? I like it with a good marinara sauce. And I'm just going out here, going on a limb. What's all going on the markets today? Let's take a look at that. We've got somewhere here, I know I've got the Dow Jones Industrial Average, or at least I used to have it on my screen. There it is. Maybe it's not on my screen there. Maybe I've got the wrong screen up. Works better when you put the right screen on your monitor so that you can actually see what the markets are doing. And they're overreacting this morning. Markets always overreact. But there was some news coming out of China and France, so that's what kind of drove the market. I'm looking right now, the Dow Jones was up earlier today. Now it's down 113 points. The NASDAQ is up 160. The S&P 500 is up 29.62. Oil is up 76 cents a barrel, but it's trading at $61.64 a barrel. Now that's a good number to see. Whoops, stop that. That's a good number to see oil trading 61.64. You got to keep it over 60 so the oil manufacturers make some money. But we're going to start seeing it. And if you haven't noticed it, if you don't watch the news, good idea. But if you haven't watched the news, there was a fire at the Chevron refinery out in Carson, I think is where it was, the end of last week. Carson or El Segundo, one of those areas. But it started in a jet fuel area, but it traveled into some other areas there. They got it out with their own on-site fire department. But that facility is responsible for about 25% of the gasoline that's supplied to the state of California. Now, if you remember Economics 101, and we talk about it here all the time, and we know that Gavin Newsom does not understand Economics 101. So if somebody wants to forward this show to him, maybe he'll get a clue. But Economics 101 tells us that when you take away supply and demand remains constant, prices go up. Now, Gavin thinks it's going to be price gouging, but we just are not going to have enough oil because we have to have our own blend of gasoline here in Southern California. So right now I'm looking that the gas prices have only gone up about 5-6 cents from a month ago. Current price of a gallon of gasoline on a national level, $3.13. California, $4.66. Yes, we are leading the country as we usually do because we like taxes and fees. If you like that idea, if you like the taxes, you like the fees, you want them to go up, keep voting for the same people. Keep voting for Newsom's Prop 50 where he takes back more control. What are you, about 370, Josh, over there in Nevada, give or take? So they're about $1 a gallon cheaper in Nevada than we are here in Southern California. Yeah, you got to love it. And I don't know about this. I think it's accurate. But I bet that a lot of the gasoline that goes in Nevada, like a lot of the country, it probably comes through the ports in Long Beach and Los Angeles. I don't remember seeing any ports in Nevada, although I hear people from time to time when they talk about the California earthquakes, talking about beachfront property in Nevada, but I think they talk in jest. That's a whole different story. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. Got a great broadcast lined up for you today. Why October is the best time to buy a home in 2025. Divorce and your credit. We'll talk about that. a house divided, the financial side of divorce. All that and more. Reach me anytime. Off-air number 800-306-1990. 800-306-1990 or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. And every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They tell us the number you need to put in your mortgage calculator to get your principal and interest payment. If you do not have a mortgage calculator, get one. It doesn't cost you anything, rsrlinks.com/mobile app. And if you want our thoughts about the market each and every business day morning, as early as the data allows, we put that out for you. We put that, I guess I'm getting ahead of myself, aren't I? We didn't even get the rates in there. Conventional 30-year fix, 6.244, that was down. Jumbo 30-year fix, 6.445, that was down. FHA 30-year fix, 6.109, that was down. VA 30-year fix, 5.811, that was up. And the USDA 30-year fix, 6.067, that one was down. And as I started to say, each and every business day morning, as early as the data allows, we put out our thoughts on the market. It's in our Circle community. It's a Ron Siegel Radio community. You can get access to that, rsrlinks.com/HBOD. rsrlinks.com/HBOD. Household Board of Directors. That is where you can get that information again each and every business day morning, as early as that data allows. Let's see what the markets are doing today. The S&P 500 is now up 26.89. The U.S. Treasury is up about 4 basis points, 4.157 as we speak. And the mortgage bond, it's down 4 basis points. And remember, when that bond goes down, interest rates go up. And a lot of it has to do, there's not a whole lot of news coming out, but we did find that Japan, bonds are lower on news out of Japan. Japan now has their first female prime minister, Sanae Takachi. I don't know how to say that. And based on her previous comments, she does appear to be someone who is in favor of more fiscal and monetary stimulus. As a result, Japan's short-term yields are moving lower, but their 10-year equivalent has risen to the highest level since 2008. This is a lesson that too much of a good thing can be bad. It's not uncommon to see central banks want a lower Fed funds rate, but if they move too low, the bond market can perceive it as inflationary and will tighten for the central bank by moving higher. And as a result, our bond market here is lower and yields are higher, but oftentimes with global stories like this, the move lower is short-lived and much of the gains are erased through the day. We are hoping to see that again. We're only starting to see a little bit of it, but not enough. ICE released their mortgage monitors showing that home values rose 0.17% in September, on a seasonally adjusted basis and 1.2% year over year. That was an increase from August, which only showed a 1% year over year gain, and the first acceleration in home price appreciation in 8 months. Supply and demand always determine price, and demand is heavily influenced by affordability. With rates falling, affordability is at the best level in 2.5 years, which is causing more demand, as evidenced in the new home sales, pending home sales, and mortgage application data. Additionally, there's a lot of pent-up demand for housing. On the supply side, this is the time of year where inventory always seasonally falls. New listings are slowing and are now beneath pre-pandemic levels. The combination of stronger demand and falling supply is supportive of home values and presents an opportunity to all of us. And speaking of opportunities, with the fall in rates, there are a lot more homeowners that can benefit from a refinance. With rates at 6.375, ICE estimates that 3 million homeowners could benefit from a refinance and save at least 0.75% in rate. If rates were to fall to 6 1/8, that figure rises to 5 million. ISM Services, last Friday, the ISM released their service index, which fell overall from 52 to 50 and was well below estimates of 54. It is now right at the 50 level, which is the break even between expansion and contraction. The employment component improved slightly from the dismal 46.5 to 47.2, but remains in contraction and underscores the continued weakness we are seeing in labor. There was an interesting comment within the report in their new orders section relation to housing. ISM said the buyers are sitting on the sidelines waiting for mortgage rates to drop, highlighting the pent-up demand in housing. That is the Mortgage Minute, brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. Let's see, your Credit Matters segment today, brought to you by rsrlinks.com/debt-free. Why experts say mortgage rates should ease over the next year. You want mortgage rates to fall, and they've started to, but is it going to last? And how low will they go? Experts say there's room for rates to come down even more over the next year. And one of the leading indicators to watch is the 10-year Treasury yield. And here is why. For over 50 years, the 30-year fixed mortgage rate has closely followed the movement of the 10-year Treasury yield, which is widely watched benchmark for long-term interest rates. And I don't know if we have this graph, Josh. For over 50 years, the 30-year mortgage rate has moved in unison with the 10-year Treasury. And you can see that when we get this graph here. And it's the one, it kind of gives us a good indication. Over that 50-year period, the average spread is 1.76. And we've chatted about that in the past. When Treasury yields climb, mortgage rates tend to follow. And when the yields falls, mortgage rates typically come down. It's been a predictable pattern for over 50 years. So predictable that there's a number of experts consider normal for the gap between the two. It's known as the spread, and it usually averages 1.76 percentage points, or what sometimes here is 176 basis points. The spread is shrinking. Over the past couple of years, though, that spread has been much wider than normal. Why? Think of the spread as a measure of fear in the market. When there's lingering uncertainty, the economy, the gap widens beyond its usual norm. That's one of the reasons why mortgage rates have been unusually high over the past few years. But here's a sign of optimism. Even though there's still some lingering uncertainty related to the economy, that spread is starting to shrink as the path forward is becoming clear. And we've got another graph here. The spread has narrowed over the past couple of years, and that spread has been 2.59. And you can see that at the beginning of the graph, and I can't see because my eyes are old, that that graph showed that we were at 2.76. I don't know how long ago that was, but it's just a couple of years. And now we're down to 2.59. And I do believe it was as of the January 5th of 23 was when that graph starts. And again, if you're watching us on ronsiegelradio.tv, any of our socials, or the ABC News and Talk AM 1490 and FM 98.1 video feed, you are seeing this graph. But we did mention last week, I think it was, that some of the folks are starting to think about a 1.5 spread by the end of next year. That opens the door for mortgage rates to come down even more, as a recent article from Redfin, quote, a lower mortgage spread equals lower mortgage rates. If the spread continues to decline, mortgage rates could fall more than they already have, unquote. The 10-year Treasury yield is expected to decline. It's not just the spread, though. The 10-year Treasury yield itself is also forecast to come down in the months ahead. So when you combine a lower yield with a narrowing spread, you have two key forces potentially pushing mortgage rates down going into next year. The long-term relationship is a big reason why you see experts currently projecting mortgage rates will ease, with a fringe possibility they'll hit the upper fives toward the end of next year. Here's how it works. Take the 10-year Treasury yield, which is sitting at about 4.09 as of the time I wrote this, at the time this article is being written again, and then add the average spread of 1.76. From there, you'd expect mortgage rates to be around 5.85%, and we've got that graph for you as well. But remember, all that can change as the economy shifts, and know for certain that there will be ups and downs along the way. How these dynamics play out will depend on where the economy, the job market, inflation, and more go from here. But 2026 outlook is currently expected to be a gradual mortgage rate decline. And as of now, things are starting to move in the right direction. And remember, that's why we've been talking about the two-step for so long. rsrlinks.com/two-step. rsrlinks.com/two-step. Get your financial house in order today. Don't worry about interest rates. 6 to 12 months from now, if the numbers are as projected, we'll have better rates, and you'll be ready because you should have a higher FICO score, and you should have less debt, better debt-to-income ratio, appreciation. rsrlinks.com/two-step. We show you exactly how to do it all. Keeping up with all these shifts can feel overwhelming, but that's why having an experienced agent or lender on your side matters. They'll do the heavy lifting for you. If you want real-time updates on mortgage rates, give me a call at 800-306-1990, 800-306-1990. We'll keep you in the loop. And don't forget, get that financial house in order, rsrlinks.com/keysteps, rsrlinks.com/keysteps. That is Your Credit Matters, brought to you by rsrlinks.com/debt-free, rsrlinks.com/debt-free. You are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, why October is the best time to buy a house, umbrella insurance, protection beyond the basics, all that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio, or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Why October is the best time to buy a home in 2025 if you've been watching from the sidelines. Now's the time to lean in. It's officially the best time to buy this year, according to Realtor.com. This October will have the most buyer-friendly conditions of any month in 2025. Quote, by mid-October, buyers across much of the country may finally find The combination of inventory pricing and negotiating power they've been waiting for. A rare opportunity in a market that has been tight for most of the past decade, unquote. So if you're ready and able to buy right now, shooting for this month means you should see more homes to choose from, less competition from other buyers, more time to browse, better home prices, sellers who are more willing to negotiate. Go check out rsrlinks.com/keysteps, rsrlinks.com/keysteps, and make sure you're ready to buy. Just remember, every market is different. For most of the top 50 largest metros, that sweet spot falls in October, but the peak time to buy may be slightly earlier or later depending upon where you live. As Realtor.com explains, quote, while October 12 to 18 is the national best week, timing can shift depending on the local markets. Best week to buy for the top 50 largest metros: Atlanta, Sandy Springs, Roswell, Georgia, September 28th to October 4. Austin, Round Rock, San Marcos. It's all Texas, September 28th to October 40th. I'm not going to go through all of these, but I will tell you, let's see, there should be some, hopefully there's some, Las Vegas, Henderson, North Las Vegas, October 5th to 11th there, Josh. Okay. And Los Angeles, Long Beach, Anaheim, October 12 to 18. We got San Francisco, Oakland, October 12 to 18. Riverside, San Bernardino, Ontario, September 28th to October 4th. So we just missed it, but not too shabby in there. What the experts are saying, Realtor.com isn't the only one saying you've got an opportunity if you move now. Lawrence Yoon, chief economist at the National Association of Realtors, NAR, explains, home buyers in the best position in more than 5 years to find the right home and negotiate for a better price. Current inventory is at its highest since May 2020 during the COVID lockdown. Daryl Fairweather, chief economist at Redfin, puts it like this. Nationally, now is a good time to buy if you can afford it. With falling mortgage rates and significantly more inventory, buyers have an upper hand in negotiations, unquote. And NerdWallet says this fall just might be the best window for home buyers in the past 5 years. How to get ready for this golden window? Make sure you're ready to jump in whenever your market's best time to buy arrives. Talk to our local agent. Give us a call. We know the agents that are doing business in nearly every zip code in the country. They'll be able to give you more information on your market's peak time, why it's good for you, and the steps you'll need to take to get ready. And of course, you find that in Key Steps, rsrlinks.com/keysteps. Bottom line, if you're serious about buying, getting prepped for this October window is a smart play. Want help lining up your strategy? Let's have a quick conversation so you've got the information you need to be ready for this prime buying time. That is the Real-Time Real Estate segment brought to you by rsrmoney.com, rsrmoney.com. Borrow Smart segment today being brought to you by gethomeselect.com, gethomeselect.com. Here's a sobering thought. You don't have to be wealthy to get sued like you are, with nearly 22 million millionaires in the U.S. Anyone who even looks like they have assets could be a target. So what happens when a lawsuit judgment exceeds your regular insurance coverage? I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Let me paint a picture for you. Your teenager borrows your car, gets in an accident, and seriously injures someone. The lawsuit, $1 million. Your auto insurance covers $500,000. Who's on the hook for the other $500,000? You are. That can mean liquidating investments, losing your home equity, or having your wages garnished. This is where umbrella liability insurance comes in. Think of it as an extra shield sitting on top of your regular auto and homeowners policies. When those limits run out, umbrella coverage kicks in. Here's what surprises most people. This protection typically costs just a few $100s a year. You can buy it in $1 million increments. That's serious protection for what amounts to pocket change. But it's not just about car accidents. Umbrella policies cover a wide range of situations. We're talking bodily injuries, property damage caused by you or your family members, or even things like slander, libel, or false arrest claims. So who needs this coverage? You might consider it if you entertain guests and serve alcohol, run a business from home, have teenage drivers, own recreational vehicles like boats or jet skis, or have a dog, especially certain breeds. But here's the real point. You don't need to be a millionaire to be sued for $1 million. If you're building a financial portfolio, you need to think about protecting it. What's the point of working hard to accumulate assets if one lawsuit can wipe them out? This connects directly to our safety, liquidity, and return framework. Umbrella insurance addresses the safety component. It's about protecting what you've built before focusing on growing it. I often tell clients to shop their insurance regularly and review their deductibles against their current financial situation. As your wealth grows, your insurance strategy should evolve too. Maybe you could handle a higher deductible now to save on premiums and use some of those savings to add umbrella coverage. Remember, insurance is part of your overall financial strategy. It's not exciting, but it's essential. Think of it as the foundation of your financial house. Without proper protection, everything else you're building sits on shaky ground. Want to make sure your financial house is in order? Visit rsrlinks.com/keysteps, rsrlinks.com/keysteps to access our financial planning tool. And as always, you can learn more at ronsiegelradio.com. You can also get a lot of articles. We post a lot of articles into our Ron Siegel Radio community. You can access that at rsrlinks.com/HBOD, rsrlinks.com/HBOD. I'm Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Until next time, keep on listening. We put out a lot of content for you. That is the Borrow Smart segment brought to you by gethomeselect.com, gethomeselect.com. We haven't talked a lot about the Home Select program a lot lately, but it's we're rebranding it, just calling it the all-in-one loan. And yes, you can get information on it at gethomeselect.com. We haven't changed the URL for it, the link. So you can go and get all kinds of information at gethomeselect.com. It challenges everything you've ever heard about a mortgage. The biggest question we get, what's the rate? And I say, what's the difference? What's the interest expense is the right question. The interest expense is lower when you get the all-in-one loan. GetHomeSelect.com. What's the term? It's a 30-year loan, but most people have it paid off without any extra payments. In fact, your payments decline over time, but most people get it paid off in 8 to 10 years. 30-year loan paid off in 8 to 10 years. Compared that to your 30-year fixed rate, which most people want, which you only pay half of it in the first 22 years. Think about that concept. So if you want to learn more about it, gethomeselect.com, gethomeselect.com. You are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, a house divided, the financial side of divorce, and we're going to also talk divorce and your credit report. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Borrow Smart segment today being brought to you by GetHomeSelect.com, GetHomeSelect.com. Did you know the divorce rates in the U.S. have actually been declining? That doesn't make the financial challenges any easier for thousands of couples still facing this difficult transition. Today, let's talk about protecting your financial future when a marriage ends. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Here's something most people don't think about when going through a divorce. You're taking income that used to run one household and stretching it across two residences, two utility bills, two grocery lists, two of everything, and that's just the start. I worked with a couple last year who came to me separately after their divorce was finalized. Both were struggling. Why? Because they rushed through their settlement without understanding the real financial impact. They made decisions in the heat of the emotion that created problems for years to come. So what should you do if divorce is on the horizon? Get your finances organized. Make copies of everything: deeds, tax returns, investment records. Know what assets you have before you start dividing them. Second, consider mediation. Most states require shared assets to be split 50-50 anyway. When divorces turn into battles, attorney fees pile up. That's money neither of you will have later. Third, understand the hidden costs: moving expenses, security deposits, higher child care costs, counseling for you and your kids. These add up quickly and catch people off guard. Here's where it gets tricky. Dividing assets isn't as simple as splitting everything down the middle. Let me give you an example. So you have two investment accounts, each worth $100,000. Sounds equal, right? Not necessarily. One might have significant capital gains that trigger taxes when sold. The other might be in a tax-deferred account. Suddenly, those equal accounts have very different net values. The same goes for your home. Keeping the house might feel good emotionally, but can you really afford the mortgage, taxes, insurance, and maintenance on one income? I've seen people forced to sell a few years later because they didn't run the numbers first. And here's something most people miss. When you're pulling apart a portfolio, you need to think about how each asset fits the person receiving it. What works for one spouse's risk tolerance and liquidity needs might not work for the other. This is where having a certified divorce lending professional matters. Someone who understands both sides of the wealth equation, not just your assets, but your liabilities too. Because strategy beats rate always. If you're going through a divorce or helping a family member or friend who is, don't let emotions drive financial decisions. Take time to understand the numbers. Consider how each choice affects your household budget going forward. And remember, the goal isn't just to get through the divorce, it's to set yourself up for financial stability on the other side. Want to understand your options better? Visit rsrlinks.com/keysteps to get your financial house in order. Then book a discovery call, bookrs15.com, bookrs15.com. And we've got a divorce lending workbook. We've got a workbook that's all set up for this that you can use to fill out and make sure you're on the right path. If you can get along with your spouse long enough, you go and you fill out the workbook together, and then it helps your mediation and minimizes the expenses of the divorce. Let's make sure your next chapter starts on solid financial ground. I am Ron Siegel, certified liability advisor and certified divorce lending professional, helping families build wealth through strategic debt management. Until next time, this is the Borrow Smart segment brought to you by GetHomeSelect.com, GetHomeSelect.com. Divorce in your credit report. This is the Your Credit Matters segment brought to you by rsrlinks.com/debt-free. Picture this. You're divorced. The judge ordered your ex to pay the mortgage. You've got it in writing. 3 years later, you apply for a loan and discover your credit score dropped 150 points and there's a foreclosure on your report. How is that possible? because the most expensive words in divorce court are, your ex is responsible for paying that. I am Ron Siegel, certified liability advisor and a certified divorce lending professional, helping families build wealth through strategic debt management. Today, I want to talk about one of the most financially devastating mistakes I see people make during divorce. I had a client come to me last year. Let's call her Jennifer. She had been divorced for 3 years. The divorce decree clearly stated her ex was responsible for the mortgage on their old house. She had it in writing from the judge. So when she came to me looking to buy her own place, she was shocked to discover the credit score had dropped over 150 points. Yes, she didn't have key steps, did she? She would have known it immediately. rsrlinks.com/key steps. Why? Her ex stopped making mortgage payments 18 months earlier. Every single late payment showed up on her credit report. The house eventually went into foreclosure, and even though she had a divorce decree saying he was responsible, guess what? Her credit was destroyed right along with his. Here's what most people don't understand, and this is critical. A divorce decree does not cancel out a contract you signed before the divorce. If your name is on a mortgage, a car loan, a credit card, or even a cell phone account, you remain legally liable to that creditor, period. The divorce court can say your ex is supposed to pay. They can even hold your ex in contempt if they don't pay it. But the bank doesn't care what the divorce court said. They care about the contract you signed. And if that loan goes sideways, both names on that loan are getting the credit damage. So what does this mean for you? If you're going through a divorce right now, or if you're divorced and still have joint accounts with your ex, you need to take action before problems show up on your credit report. Here's the strategy. Refinance them off or refinance yourself off. That's the only way to truly remove yourself from the liability. Let me give you another example. I work with a couple going through divorce. They had a house worth about $650,000 with a mortgage of $400,000. The husband wanted to keep the house. The wife wanted to move on. In the divorce agreement, they said he'd be responsible for the mortgage. But here's what we did differently. We had him refinance the mortgage in his name only before the divorce was finalized. Yes, it cost a few $1,000s in closing costs, but you know what it saved her? It saved her from being tied to a $400,000 liability she had no control over. She could go buy her own place with clean credit and full borrowing power. Without that refinance, even if he made every payment on time, that $400,000 debt would still show up on her credit report. It would count against her debt-to-income ratio. It could potentially prevent her from buying her own home. And if he missed even one payment, her credit takes that hit too. This applies to everything. Car loans, credit cards, home equity lines of credit, even utility bills in both names. If you're on the account, you're liable for it. The divorce decree is just a piece of paper between you and your ex. It doesn't change your contract with the creditor. Now, I know what some of you are thinking, but Ron, my ex agreed to pay these things. I trust them. That's great. I hope it works out, but I've been doing this since 1983, and I can tell you the divorce changes people. Financial stress changes people. And even with the best intentions, life happens. Job losses, health issues, new relationships, new expenses. When your ex can't make that payment, it's your credit that suffers too. As a certified divorce lending professional, this is exactly the kind of situation where getting proper guidance makes all the difference. It's about suitability, not just eligibility. It's about protecting yourself strategically, not just hoping everything works out. Here's my advice. If you're going through a divorce, make a list of every single account with both names on it. Then work with a qualified professional to create a plan to separate those liabilities. Sometimes it's refinancing. Sometimes it's selling assets and paying things off. Sometimes it's negotiating who takes which debts and then refinancing accordingly. And if you're already divorced with joint accounts still out there, don't wait. Deal with it now before you have late payments or worth showing up on your credit report, and monitor that credit report. Key steps. rsrlinks.com/key steps. Remember, strategy beats rate always. In this case, the strategy is protecting yourself from liability you can't control. That's worth far more than shopping for the lowest interest rate. If you're going through a divorce or dealing with the financial aftermath of one, let's talk. I've helped hundreds of people navigate this exact situation. You can schedule a discovery call at bookrs15.com, bookrs15.com, or visit my website, ronsiegelradio.com or siegellendingteam.com to learn more about how strategic debt management can protect your financial future during and after divorce. Don't let your ex's financial decisions destroy your credit and your ability to build wealth. Let's get you protected. Until next time, this is Ron Siegel. I am your certified liability advisor and certified divorce lending professional, helping families build wealth through strategic debt management. That's your Credit Matters segment, brought to you by rsrlinks.com/debt-free, rsrlinks.com/debt-free. And Josh, did you happen to check and see if our divorce workbook is still active? I think that's still active on there, but I'm not sure if we've still got that one. It was where is it? mydymworkbook.com, I think is what it might have been. Might have been mydymworkbook.com. We have a divorce your mortgage workbook. The link is not active any longer. We'll have to get something up there so we can get that for you. But we've got to divorcing your mortgage workbook, and we've had it for a long time, and you should have a copy of that if you're going through divorce. So let's just make sure that you've got that. And for some reason, I don't know why my clock stopped, but make sure you're going through and getting those things taken care of. And there's a couple of areas that you should be looking at. Key steps: monitor your credit, monitor for identity theft, monitor your assets, and make sure you're mortgage ready. So rsrlinks.com/key steps. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean for engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.